Good evening. I'm Professor Shirish Kulkarni, Professor in Accounting and Financial Management at Faculty of Commerce, MS University of Baroda. Then I had been appointed as Vice Chancellor at Sardar Patel University, Vallabh Vidyanagar. Once again, I will continue with the GST primary terminology I am going to speak on. Earlier also, I have given some of the primary terms. Now I will continue with that. Let's say first, there are some abbreviation used already in practice. For example, the number one is GST, that is a goods and services tax. As I have stated, it is in two parts, dual GST, that's what last time we have studied. It is SGST, that is State Goods and Services Tax. There is a separate act for all the states. Then CGST, that is Central Goods and Services Tax. So that is for the central government. So there is no separate thing. It is 50-50. It has been decided. Then it is IGST. It is Integrated Goods and Services Tax. That is combination of state and central GST. So if the goods are supplied outside the state, then there are two states. So which state GST should be collected? That was an issue. Therefore, it is integrated goods and services tax, combination of both. Then there is a UT GST, that is Union Territory Goods and Services Tax. So that also has been by Andaman, Nicobar, like that, Selvas. So these union territories are there, and for that there is a separate tax, UT GST. Then some abbreviations are not there, but it is the GST rules are there. Central Sales Tax Act is there. State for all, it is Act, and then the rules are also there. For UT GST also there are rules, and integrated GST there are rules also. So this is what is about the abbreviations. Now I will proceed with the next term, and that is registration. This is very important aspect to understand. Without registration, one cannot issue the invoice, and there is a limit for the turnover. Aggregate turnover exceeding 40 lakhs for the goods supplied, then one has to go for registration. In case of services, the aggregate turnover of only services, then it is 20 lakhs threshold limit. So this is how registration is required for those who are exceeding the limits which are being assigned. Now this registration is PAN based, that is permanent account number of income tax. Without PAN, registration is not possible. Then every registration is of 15 digits, alpha-numeric. Both the types are there in that 15 digits. It is beginning with first two digits are related to state. So every state, there are total 35 such things, and 1 to 35. The state has been assigned the two digits. Let's say in Gujarat it is 24. Then for Delhi it is 07. Maharashtra it is 27. So on and so forth. So every state has been assigned this code, this digits, two digits. So your 15 digits registration number will begin with two digits, that is related to state. Then another, starting from third, 10 digits are of PAN number. So that PAN number is of 10 digits, in which there are 4 digits numeric and remaining are alphabets. So total 12 is over. Then 13 is coming with the number. See, registration can be of uh, trader, manufacturer, service provider, godown, rent taker, etc. etc. So services or goods for both. The registration is required. Now there is a possibility that registration number for a dealer, it is if he is in one state, then for that one state he will have to get the number, as I have stated, 2 digits for the state. Obviously this person may have his branches, he may have his factory, he may have his godown, so that all in one state he requires only one registration number. There is a possibility that he wants for separate premises, separate registration, yes, he can avail. So like that also registration for all the premises one enterprise can take. Then if the one registration, the trader or manufacturer is having his branches outside the state, then it is compulsory for him to take the another registration. So the moment state changes, one has to go for the separate registration. Otherwise, in one state he can have the number of places. So I am coming back to that registration 15 digits. First to state, then PAN number 10 digits, then the 13th number will be for that number of premises he is having in the same state. Let's say he has godown and factory, office. So like that, he will have that 13th digit of number of places with one registration, same PAN number. See, again, keep it in the mind. In one state, number of premises, but PAN number is 1. Then only he can have the registration one for all. Otherwise, he is free to go for separate registration for separate premises. Then coming for the 14th digits, that 14 digit will be a Z, always Z. And the 15 digit will be check code. So that is how the 15 digit code number or GSTIN, Goods and Services Tax number. So that number you are getting from the GST office. So that's about initial information, primary information about the registration is enough. We go for the next, and that is the tax invoice. See, normally the invoice is nothing but the bill. When a supplier is selling the goods, he is issuing the bill. Up till now it was called as a bill. But in GST terminology, it is said as a tax invoice. Tax invoice means it is a bill along with the tax paid. And that's why it is called as a tax invoice. In this tax invoice, there is a registration number of a seller or a supplier, as well as it has to be mentioned about the recipient, the buyer. His registration number also should be there. So address of supplier, that is seller, and address of the buyer or the recipient, that both addresses are must. Then let's say there are two types of, or the two categories of the supplier I am saying. One whose turnover annual is less than 5 crore, and another is who is having aggregate turnover more than 5 crores. What difference does it make? One, if he has less than 5 crores of turnover, then HSN code, Harmonized System of Nomenclature. So he has to mention about only 4 digits of HSN. And if he is having aggregate turnover for more than 5 crores, then he has to give 6 digits of HSN code, that is compulsory. And without a tax invoice, the next is the input tax credit he cannot get. But before going for input tax credit, let us have one more term, and that is destination based tax. See, whenever there was a sales tax, state sales tax, at that time it was a origin based tax. The goods where they are being produced, manufactured, or imported goods are being sold, so that is the origin based tax. So the state from which the goods are being sold, the tax on sale was enjoyed by that state, seller state. But GST is just like a VAT, value added tax, and in which there is a destination based tax. So who manufacture the goods, that state may not get the benefit of the tax, because if the goods are being supplied outside the state, then in that way, where the goods are being consumed, it may be many states one after the other, that the same goods are being supplied. Then ultimately destination, what is the destination? Where the goods are being consumed. So consumption based tax or destination based tax is the GST. I hope it is clear. Going for ITC, that is the input tax credit. Just like a value added tax. In value added tax there was input tax credit. On the similar basis, here also there is a input tax credit. What is it? Input means what I am purchasing. Input. And that tax I am paying to the supplier. So my seller gets price of the goods and simultaneously the tax on that. So supplier gets that from the recipient, the buyer. So this buyer, once he has paid the tax, he is allowed to take the credit of that. And that credit he can utilize as and when the same goods or other goods he is selling to someone else, some other buyer. In that case, he has to make the payment of tax to the government. From that tax, he can reduce, minus, subtract the input tax credit. So this input tax credit is beneficial for any trader, supplier, manufacturer. But this credit is of what? Because we have stated that is a dual GST. I have just given you some abbreviations, that there is a CST, there is a SGST, there is a IGST, then the credit of this all, UTGST also I have stated. So this all taxes whichever has been paid to the supplier, that same is allowed to be taken as a credit. But mind it, the CGST, that is a Central Goods and Services Tax, credit can be used only for making payment of CGST. It can never be used for the SGST. Whenever you are paying SGST to the state government, in that case the credit of CGST is not allowed, so there is a limitation. Similarly, the SGST, the State Goods and Services Tax credit, that credit cannot be utilized for CGST. So that cannot be cross CGST and SGST. But I have stated to you that CGST and SGST are jointly in integrated goods and services tax. That is what we call as an IGST. So IGST, interstate sale, outside the state sale is taking place. So for that, whatever tax has been paid to the supplier outside the state, within the state, that IGST credit is available to the buyer. Buyer will get the IGST credit. So there is again limitation for IGST. It cannot be utilized for unless and until first it should be used for IGST. Credit of IGST can be used for IGST. If that is not there, then it can be used for CGST. After that also there is a balance, then it can be used for UTGST or SGST. So like that IGST is also available, but UTGST and SGST credit cannot be used for CGST. But yes, the credit of SGST, credit of UTGST can be used for making payment of IGST, integrated goods and services tax. So that's how the input tax credit primarily I have stated to you. In length we will see later on. It will take a lot of time. So I am going for the next, and that is aggregate turnover. See, whenever we call aggregate, it is total. Total sales of an year. Total year sales or supply. The value of that is considered as an aggregate turnover. But in what are the components of aggregate turnover? Number one, it can be taxable turnover. Number one, when the goods are being sold with GST. Second, exempted sales on which GST is not levied. So such exempted goods are also to be turnover to be added into aggregate turnover. And the third, it is the exported sales, that the goods have been exported outside the India. At that time, that supply also should be added into the aggregate turnover. So that's how the aggregate turnover is to be considered for the threshold limit. The threshold limit 40 lakhs, 20 lakhs, that's what I have stated to you. So we have to be careful in calculating the aggregate turnover. That's all for today. We are stopping this particular topic, primary terminology. Now then we will proceed for the next, and that is the supply. Thank you very much.